Are we finally going to see home prices drop in the Seattle, Washington housing market, as well as the surrounding areas in Washington state? In this video, I'm going to provide the data for all of you as home buyers and investors in Seattle and the rest of Washington so you can understand where home prices are heading in 2025. And the first thing to understand as we look at data on ReVenture app is that home prices in Seattle are up by 4.6% over the last year. We're now up to a typical value of $733,000 in the Seattle, Tacoma, Bellevue metro area, which is significantly above the fair home value and indicates an overvalued market. Now, Seattle's been overvalued for the last 3 or 4 years, yet prices haven't really dropped. Outside of a mini correction in late 2022, 2023, where prices dropped by 10%, they've continued to go up due to a shortage of inventory on the market. There simply haven't been enough listings in the Seattle housing market to cause prices to drop up until now. So I want you to take a look at this, everyone. In Seattle, Tacoma, Bellevue, there's 7,700 homes for sale. I'm going to talk about some of these other areas in Washington in a second, but let's just talk about Seattle, Tacoma, Bellevue. Last year, there was only 4,800 homes on the market. The inventory was really low at this time last year, which is why prices went up by 4.6%. However, now the inventory is up to 7,700 homes, which is actually the highest level we've seen since 2019. So actually now there's a lot of supply hitting the Seattle housing market, which is now pushing the ReVenture forecast score to below 50, which is indicating still kind of a stable market, but we're starting to shift more towards prices potentially declining. Because it's important to understand that there's a lag between supply and prices. Supply can go up or down, and then it will impact prices over the next 12 months. And so the metric that you guys need to be watching out for if you're in Seattle is those supply figures, because they're going to really tell you the direction of prices in your market in 2025. And you can see we actually have pretty even dispersion of increase in supply. 52% growth in Snohomish County, 61% in King County, 64% in Pierce County. So we have a big increase in supply going on all across here. We also have a 62% increase in supply in Kitsap County, which covers Bremerton. And even if we go out, and we have also big increases supply here in the middle of the state as well. So a lot more inventory hitting the market, more sellers deciding to finally sell their homes across Washington. The question is, just how much could prices drop if this surge in listings continues over the next year? Well, to answer that question, you got to look at the fundamentals, everyone. Are the current home values in Seattle and the rest of Washington justified based on the underlying fundamentals in the market related to income and rent? Because ultimately, it's income and rent that determines the long-term trajectory of prices. Incomes determine how much money a regular buyer can afford, while rent determines what an investor can afford in buying a house. So let's look at the income and rent levels across Washington state to see if we can find a clue about how much prices could drop if we continue to see more supply hit. And to answer this question, I'm going to look at a metric called home value to income ratio, which takes the typical value of a house and divides it by the median income. You could see in Washington state, the home value to income ratio is 6.1, which is one of the highest in America. It's actually the third highest. Washington's the third most expensive state in America to buy a house relative to income. So if you guys are out there in Washington saying, I can't believe it's so expensive, you're right. It's the third most expensive state in the US. But really what matters with the value to income ratio is the historical norm. So here on ReVenture app, we look at the last 20 years of data in terms of how home prices have related to income in a market. And what you can see today in Washington is we're at a 6.1 home value to income ratio, while the long-term average is 5.1. So this indicates an overvalued market. Prices are trading to a premium from what they normally do relative to income. The last time we saw this happen was in 06-07, before the big crash, when prices actually became very cheap in Seattle after that last crash. And so the market's overvalued. It's about 20% overvalued in Washington, everyone. Prices are 20% overvalued from their long-term norms, suggesting that there's some definite downside if you're a buyer in the market today. I'm sure a lot of you guys are out there in Washington, you're looking at homes and you're saying, how does this math even make sense? How do people afford the houses here? Because say you just wanted to buy a normal house in the suburbs, how much would that cost you? Well, for a 4x3 home in Shoreline, a northern suburb, you'd have to pay $983,000, which in terms of your monthly payment would be $7,500 a month to just buy a normal suburban starter home, 1,800 square feet. Now, $7,500 a month That's almost $90,000 a year for your house payment. And I think the issue for Seattle is not only is that very expensive, that's much more expensive than it would cost to rent the same house. If we go back here on Zillow and look at houses for rent in the same neighborhood, you can get a 6-bed, 3-bath, 3,000 square foot house with some land for $4,500 a month. So this is a bigger house, more land, more bedrooms for 40% cheaper in terms of the monthly payment in the same neighborhood. And that buy versus rent differential is one reason additionally why I think prices in Seattle are going to have to go down, because we're not going to see a true return in buyer demand in the Seattle housing market until there's more of an equilibrium between home prices and rents. Because why, if you're a first-time buyer, would you accept an inferior house and pay almost 2 times as much to have that inferior house to buy it? It just doesn't make mathematical sense. And it's one of the reasons why actually the buyer demand in the Seattle housing market is very, very low right now. And this is an important point for everyone to understand. If you're a buyer, investor, or even a realtor or mortgage broker in the Seattle housing market, this data I'm about to show you is actually kind of shocking just how low the demand in the market is right now. This data comes from Redfin, and we're looking at the weekly adjusted home sales in Seattle going back 7 years. And what you can see is on the 3-month moving average, weekly adjusted home sales in the Seattle metro were 681 in late November. Now, this is above where they were last year in late November by about 18%. However, it's 43% below the peak in sales we saw during the pandemic, and it's about 23% below what the sales were in 2019 before the pandemic. And so we are in a historically low buyer demand environment in Seattle right now. It might not totally appear that way to you as a buyer over the last 2 years because there was an inventory shortage and prices still went up. So maybe it seemed like there was a lot of buyers, but actually there's not. The buyer demand is very low because the affordability is so poor, which suggests that if inventory continues to increase, that listing data I showed you in the beginning, if we continue to see more homes for sale on the market in 2025, that could be something that pushes down prices. Because if the inventory goes up and the demand doesn't go up to match, sellers are going to have their houses sitting on the market for a long time, and the longer they have their houses sitting on the market, the more they'll feel pressured to eventually cut the price. As you can see, if we look at the days on the market on Reventure app, all these different metros in Washington, you can see Seattle Tacoma is 44 days on the market, Spokane's 45 days on the market, Bremerton's 50 days on the market, Ellensburg is 88 days on the market. So we actually have much higher days on the market here in the middle of the state. But really what matters is the historical differentiation. And what's concerning for the Seattle housing market now is that the days on the market of 44 in October, we're about to update this data for November, it's the highest it's been in 7 years. So homes are sitting on the market in Seattle for the longest that they have in 7 years. And to be clear, that doesn't mean that they're sitting for a tremendously long time. 44 days is actually pretty quick compared to a lot of other markets, but it's gone up and it's gone way up. So think about this, everyone. The days on the market is way higher. The inventory is way higher. And why might that be, everyone? Why might there be higher inventory, higher DOM? We see the home sales are low. Well, I'm going to look at migration. And something that's concerning me for Washington in general is lower migration figures. You can see Seattle used to be a market that added tons of people. If you go back all the way to 1991, this migration data here on Reventure app, sourced from the US Census Bureau, shows you that Seattle was almost always a high migration market, particularly all the way up to the pandemic. Seattle was adding between 20,000 and 50,000 people a year to its metro population due to migration. Then we had a big outflow during the pandemic. There was a slight rebound in 2022. Then in 2023, we went back into negative territory. So structurally, there seems to be some issues with the migration into Seattle. Now, the state as a whole is also experiencing some issues as well. The state as a whole still added people in 2023, plus 14,000, but you can see that's much less than it was over the last decade. And so another thing to think about if you're a Seattle buyer, a Seattle investor, or a realtor, is that the migration figures of people moving in, they have really slowed. And in the case of Seattle and King County in particular, they've gone negative. So that's going to be something that might be a drag on the local housing market in the future. These lower migration figures, these lower population growth figures, which I'm pretty positive are related to affordability, everyone. Seattle's a great place to live, beautiful part of the country, but when it costs $750,000 to buy a house and your monthly mortgage payment is $7,000 a month, a lot of people are going to get fed up with that and they're going to leave, and that's what we're seeing right now. But now I kind of just want to wrap this up for you guys. All this different data, how does this translate to my forecast for the Seattle housing market and the Washington housing market in 2025? Well, my forecast is negative. I think prices could drop in Seattle this year due to the metrics I've shown you in this video. And in particular on ReVenture, we've developed a score that takes all of these factors into account. And we call it the ReVenture Home Price Forecast Score. And it's ranked from 0 to 100. And we have this available for every zip code in Washington, in Seattle, so you as a buyer can have a better sense of where the trajectory of your market is. And we actually just ran the data on this score, everyone. We looked at what the ReVenture score was last year in 2023 and compared it to what the price growth was the following year in 2024. And we found that in the largest metros, ReVenture Home Price Forecast Score forecast future prices with 74% accuracy. You can see a tremendous predictive ability of this score at the metro level to forecast future price growth. And so we were really happy here at ReVenture when we looked at this historical data over the last year. It was much better than simply looking at the previous year's price growth. It was also much better than Zillow's forecast from 2023 as well. So I'm excited to share this really valuable data with you guys in terms of forecasting future prices in Washington. Let's take a look at what the ReVenture price forecast is looking like for 2025. Well, we can see Washington is a 45 out of 100 in terms of the price forecast score. So that is a below average score, indicating we expect moderately declining prices in Washington if the current trends hold in 2025. So maybe this would be -3%, year-over-year appreciation, something to that effect. However, you can see there's large differences that exist across the state in this score, as well as in all the different counties across Washington. You could see here that the northern part of Washington has stronger scores, stronger housing market here, as well as on the west coast here, the northwest coast. While the scores get worse the further you go into the state. Spokane has a score of a 43 out of 100. That's indicating more downward price pressure. King County is a 44 out of 100. But really what you folks got to do is dig into these scores for your zip code, because there's huge differences that exist across an area, across a geography. We can see some areas of Seattle were forecasting positive price growth in 2025. Other areas were forecasting negative price growth. To understand how your neighborhood and zip code stacks up, head to www.reventure.app, type in your city and zip code on the main page, and check out that home price forecast score. To see the full data, you'll need to sign up for a premium plan. The cost is only $39 a month, a small percentage of the cost of buying a house in Seattle. You're going to want peace of mind when you make that home purchase decision in 2025. So go to ReVenture sign up for that premium plan, and access the home price forecast scores for your area and understand how your market is trending over time.